the inflation trajectory is now poised at a decisive point. While there are incipient signs of a confluence of factors that could lead to further softening of domestic inflationary pressures, there remain significant uncertainties.
Today, the Reserve Bank of India raised the repo rate by 50 basis points. The repo rate is the rate at which RBI lends to the banking system. As such, when the RBI raises the repo rate, it becomes costly for everybody in the economy to borrow money, whether you're a consumer or a producer. The repo rate now stands at 5.4%, and the significance is that this is the rate now which is comparative to what it was before the pandemic hit the Indian economy. So in many ways, we have sort of come out of the phase where during the pandemic, the RBI tried to apply loose monetary policy and revive the economy. At 5.44%, it would be costlier for consumers who might be borrowing for a car loan, for a home loan, or for producers who might be borrowing to start a new investment or to increase the capacity in an existing business. As a result, this move will actually have a dampening effect on the overall economic growth of the Indian economy. The question then is, why is RBI doing this? And the important answer is, RBI is increasingly now shifting its focus towards inflation control. For the past 2 years since the pandemic hit, RBI was trying to revive the Indian economy and trying to cut interest rates, make it easy for everybody to do business, to borrow money. Now, because the inflation rate has stayed pretty much above RBI's comfort zone, RBI is now increasingly trying to contain inflation. Inflation has come down from the 7.8 or 8% level, which it hit in April. It has now come to 7%. But still at 7%, it is still above RBI's comfort zone of 2 to 6%. For the current financial year, which will end in March next year, RBI expects inflation to be 6.7%. As such, it now should be expected that RBI will continue to increase the interest rates in the coming months also to contain inflation. The next question is, what about economic growth? Will this not dampen economic growth? So yes, the answer is yes, it will dampen India's economic growth. But the RBI has not changed, and this is rather curious, the RBI has not changed its growth projection for the current financial year. In April this year, RBI said their GDP will grow by 7.2%. But at that time, the inflation forecast for the current financial year was 4.5%, which is fairly benign. But today, and since June, RBI's inflation projection is 6.7. So from 4.5 to 6.7, it has significantly raised the inflation projection for the current financial year. And the interest rates, the repo rates, have gone up by 140 basis points or 1.5 percentage points. And with another 50 basis points expected for the rest of the year, all of this will have a dragging effect on the overall economic growth. So it would not be surprising that maybe in the coming months, at some point, RBI might be forced to revise the growth outlook downwards.